Who doesn't want to be in South Florida? Nobody. Everybody wants to be there. Anthony Lamacchia here with Lamacchia Realty, wanting to go over a South Florida real estate update with you all. Want to talk about changes in the market, such as interest rates going up 1.5 in 90 days, which is historic. Largest interest rate increase since 1994, and it's very close to being the largest since 1981. But there is still a tremendous amount of demand for South Florida. Everyone wants to be there, as I said when I started. And the folks, locals in South Florida, in my opinion, they're getting the brunt of this frenzy-like market even worse than other areas of the country, because you're dealing with people that are coming from outside the area into your town, buying up homes, competing with you. So home sellers in South Florida have been lucky. But I do see some of the sizzle on the boiling pot that has been overflowing with this frenzy for 2 years, backing off a little bit, and that is thanks to interest rates. Now, on the street level, if you're a home buyer, you're probably thinking, what is he talking about? There's still multiple offers everywhere. I understand that, but it's getting a little bit easier. Part of that is seasonality. Part of that is interest rates lowering the amount of buyers that are out there buying homes, okay? Instead of open houses with 50, 60 people, it's going down a notch. Instead of 20 offers, maybe it's 10 offers. Buyers, you should be thrilled about that. I understand you're frustrated with respect to mortgage interest rates going up as much as they have, but look at the bright side. You're going to be able to actually make an offer and buy under somewhat normal circumstances, somewhat normal, the new normal, probably by the end of summer or fall. Right now, we're seeing early signs of that. And this is something that the Federal Reserve is trying to do on purpose. And, you know, it's frustrating to buyers, but we all have to remember that the Federal Reserve's job is to balance the economy, not let it get too hot, not let it get too slow. But one of the biggest things, or arguably the biggest thing that a Federal Reserve bank worries about, is inflation. They don't want that to happen. So they've been raising the short-term rates, which do not have a direct correlation or impact on long-term rates, but they have somewhat of an impact. And that's why part of the reason we're seeing interest rates go up. We're also seeing them go up because the Federal Reserve stopped buying mortgage bonds. That's something that they started in 2009 and 10 and 11. And they did it when COVID hit because investors weren't buying mortgage bonds, mortgage-backed securities. When the Federal Reserve goes in and buys them, it drives down interest rates. And that's something that they wanted to do when COVID hit. You all have to remember that as frustrating of a time as we've lived in the last 2 years with this pandemic, it actually didn't get as bad as many people thought it would. And it was not as bad as 1918, 1919, 1920, where people couldn't leave their houses for periods on end. People weren't buying houses. It crushed the economy for a good bit of time. But remember, after it came the Roaring 20s. So I want to point those things out because they were trying to lower interest rates, and they did that. And when they lower interest rates, it adds fuel to the fire, right? Think about that. It adds fuel to the fire. It gets buyers pouring in. It also drove many people down south. And folks in South Florida, you're in a great place, right? I enjoy being there. I go there at least once a month at a minimum, sometimes more. And when you think about it, people want to be there. Why? Weather, tax policies, you can call them. I'm not trying to be political, but it's true. Tax policies in a lot of the northern states are driving people, particularly those with money, south, particularly to Florida, because the tax rules are much more favorable, particularly to business owners. So that's another reason. And it's a bit of a different atmosphere. I certainly notice it's a little bit more of a laid-back atmosphere. I don't fit in quite as well. But I want to point those things out because that's part of what has created this, you could almost call it a gold rush to Florida, right? People just going down there in droves to buy properties on the water, buy single families, buy condos, etc. There's been a huge run to Florida. And I will tell you, so far, it looks like I'm wrong with one of my predictions. I had predicted that we would notice that things slow down a little bit in Florida before we noticed it in the northern states. That has not proved to be true. I think part of that is winter. Winter, it always slows down up north. and this year it slowed down more. But I am seeing something that's happening in Florida that is actually more dramatic than up north, and that is homes listed for sale. The amount of homes that are being listed for sale in a given month are noticeably lower than the last years. And I'm going to show you the data in a few minutes. I have all the charts and graphs to show you. That's noticeably lower. And it's noticeably lower up north too, but it's worse. It's actually more noticeable in Florida. So the amount of people listing has really slowed down. I think part of the reason for that is there's some sticker shock going on. There's sellers that want to sell and buy something else. And they're like, wait a second, I'm in a house paying a 2.5%, 2.8% mortgage rate. If I list my home and I buy something new, I'm going to go to 5%. I don't want to pay 5%. Folks, we're spoiled. We've gotten spoiled in the last really 10 years with interest rates, but especially in the last 2. Remember, interest rates did go up over 5. I'm going to show you an interest rate chart as well. They did go up over 5 in 2018, very, very briefly. And we saw the market slow down in the fall of 2018. And I think we're going to see that more so. We're already seeing it in northern states, but winter's playing a part in that and us seeing it earlier. I also think we're going to see that in Florida. It is slowing up a little bit. It is going to be better for buyers. Sellers, if you're hesitating to list, you should not do that. You should list soon, list sooner than later. Not that I expect any downfall. I don't expect prices to just fall. Low inventory, multiple offers. COVID came and it dramatically increased that because of the low interest rates and in Florida because of many people going south. So I want to point out all of those different things. Now what I want to do is I want to actually pull up my PowerPoint that our marketing team put together for me to present to you all, because I want to show you what it looks like, and I want to go over some data with you. I'm going to jump over to the PowerPoint. I'm going to go to full screen so that you can see it. This is the amount of homes that are listed for sale per week in South Florida. This is very, very interesting. Notice that 2022 is the red line. Look at that. Less homes listed per week every single week. It's incredible. Every single week. Now we're getting to the point that, okay, it's higher than in 2020, but that's not a great comparison because that's when COVID hit and everybody pulled back on listing. Okay. So this is single families, condos, and townhomes in Miami-Dade, Broward, and Palm County, all 3 of them. Okay. So if you look at them, noticeably less homes getting listed. Now let me go further in the presentation here. I want to show you what's next. This is homes pending. Now here's what's very interesting. Despite less homes being listed, look at pendings. Yes, they're lower than 2021, but they're still historically high. It's incredible that they're able to be that high, considering the fact that think about it, dramatically less homes are listed. We're talking about a significant amount of homes going pending. Look at February, almost 11,000 homes went pending in the month of February. Despite, if I go back here, dramatically less homes being listed. It's amazing. And what does that do to inventory? Drives the inventory down. Look at the amount of homes sold year to date. For the most part, much, much lower. Look at the red line. Each week, less homes selling than last year. So by now, the people that are watching are thinking, wow, is it slowing down? Yes, in a certain sense. Now, does less sales, less pendings, less listeds mean properties getting listed mean prices are going to fall out? No, it's 2 different things. So when you start seeing in the media, and I'm going to talk about that in my recap at the end, when you start seeing in the media, housing slowdown, X% less sales, that doesn't mean prices are down. Look at prices, speaking of prices. Average price for a single family in South Florida, all 3 counties, in February, $901,000. $901,000. That is up substantially from 2019 pre-pandemic. Look at that. Single families, $500,000 they were selling for. $525,000 right in between there. In 2019, it spiked to $550,000. Then you get into 20, It went to high fives, and you see it from about July 20 on, it just skyrocketed. I don't see prices going down anytime soon. Now you look at condos and townhomes, same thing. Look at 2019, 300,000, 320,000. Now 537,000. People got away from shared living a little bit in the beginning of the pandemic, and then they came running back when they realized it wasn't so bad. That was a few month thing. Actually, it lasted about 6 or 8 months, but it came back strong. Look at active inventory. So remember I mentioned this. Remember, turquoise line is 2021. Red line is 2022. We started the year in South Florida with 16,000 homes for sale. Incredible. Lowest start to the year ever since records have been kept. Really incredible. 16,000 homes for sale. We get to February, what happens to inventory? It's lower. Why? Because remember what I said, pendings are up, listeds were down. So the inventory is getting eaten up. I really wish I could be sitting here showing you March, but we don't get the data till about the 23rd. So when we get it on the 23rd, we will be putting out our March housing report, and we will put this graph in there updated. So make sure to keep an eye on lamakiaflorida.com, because we're going to be putting our updated housing report in about a week. But look at that. Now, if you watch my cursor, this is what I expect to happen. It's going to stay low. We get into the summer, inventory is going to start to climb back up. I do think we will be above 2021 level by the end of the year for inventory. Everybody, go ahead, write it down, mark your calendar. April 14th, 2022, Anthony Lamacchia making a prediction, inventory will start to rise back up again. Now, in order for that to happen, we have to go through some adjustments in the market. Hang on, I want to make sure there's not a mix-up here. One second, I'm just checking the data. I think we have a mistake. This is the slide that I should have looked at. This is just single families. That's what's going on here. I apologize, folks. On the top, it says condos and townhomes as well. That can't be right. I know the numbers. 15,000 single families. Everything I said else still applies. I think this is going to rise up into here before we get to the end of the year. Now, when I click and I go to singles, condos, townhomes, now we're at 42,000. Okay, that makes more sense, because when I saw 11,000 and I said it out loud, I was all confused. 44,000. We started the year with 44,000 total homes for sale, total units for sale, whatever you want to call it, in South Florida. Incredible. This will go like this by the end of the year. We will stay flat, and then it's going to rise up. And to many of you realtors listening, home buyers listening, that's exciting, right? But I want you to think about something. In order to get there, we have to go through an adjustment period. And when we go through one, there's two things that happen. Buyers dramatically overreact because they think they smell blood in the water. And buyers start saying, oh, this is it. Market's going to crash. Folks, let me talk to you about the market for a few minutes. The book of mortgages that have been written in the last 10 years are the strongest book of mortgages ever written in one decade in history. Highest down payments, lowest debt to income ratios, highest average credit scores, okay? What happened 15 years ago that everybody still has post-traumatic stress on is something that was significant and extraordinary, but it's because it was multiple crises at once. Real estate, housing, well, same thing, mortgages, defaults, jobs. It was truly the perfect storm that hit across the board, okay? Hit completely across the board. We're not facing that here. There's also been a tremendous, tremendous amount of cash that has poured into Florida in the last 2 years. Really, the last 3 or 4 years, Florida has been just eating cash from all over the country with cash buyers. Cash buyers don't walk away from properties. People that are upside down, that have mortgages for, $400,000 and they find out the property's worth $3 million, those people walk away from properties. They're more likely to. Not saying everybody did, but many of them did years back. So be aware of that, okay? If you're a home buyer and you're listening, I want you to think about this, and I want you to understand what I'm telling you. Do not hear what I'm telling you and say, oh my God, it's going to crash. I need to go out and make a $400,000 offer on a property that's listed for 600 that's well priced. You want to do that so you can realize you're not going to get it? Go ahead. Some buyers need to go through that exercise. Go ahead. But you're just going to shoot yourself in the foot. Sellers, you also have been known to dramatically overprice and just price yourself out of the market, okay? Be much more careful doing that. Over the last 2 years, home sellers have been spoiled. And folks, I'm talking to myself here too. I'm a buyer and I'm a seller. There's not a month that goes by that I don't buy or sell a property. And that's been the case for, well, about 2 years. Around COVID, we backed off for a few months. But before that, it was several years before that. I'm a buyer and a seller, okay? All the time. Don't overplay your hand. I will tell you what I do with our properties that we sell. I don't even price them. A gentleman by the name of Mike McGrory prices them. Been working with Mike for years. He knows my instructions, and he feels the same way. If all the comps in the neighborhood are 800 to 850, we price at 799. If all the comps in the neighborhood are 1,500,000 to 1,600,000, we price at about 1,475. We do it all the time. Why? Because the lower you price, the more people you will draw to the property. They will realize there's competition, they will compete, and they will pay more. That's what we do. You should do it too. Popular belief is, oh, if I price more, I get more. No. The truth is contrary to popular belief, okay? The lower you price, the more you sell for. If you're selling in a condominium complex, maybe you're in a 1-bedroom or a 2-bedroom in Fort Lauderdale and it's worth $300,000 or $250,000. If it's worth $300,000, price it $279. Price it $289. Go a little low. You attract everyone you sell for more. That's something that sellers should be doing and something sellers should be more aware of. We're now entering a phase. It's very preliminary, me saying this in South Florida, but we're entering a phase where things are starting to change. We're starting to see offers get accepted with some larger closing cost credits. We're starting to see our agents be able to negotiate a little bit better than they could. But we're also seeing a lot of multiple offers still. So for people watching, they're like, oh, it's still really hot. It is. But that pot that's boiling, you know, when you're cooking pasta and it overflows and the cap starts doing this, the Federal Reserve is walking over to that lid and they're going like this, trying to let some of the sizzle out, trying to let some of the steam out. Their hope and their intent is to create a soft landing, to make the market slow down a little bit, get back to where it was. Let's say this table is where the market was pre-COVID. They want it to just kind of get back there, and they want it to be a soft landing. Doesn't usually work out that way. Usually there's some bumps along the way. Usually there's home sellers that still overprice or price like it's still going like this, and then there's bumps along the way. They have to adjust their price, etc. We're going to see some of that this year. I think in Florida, it's going to take a little bit longer to see. We'll probably see it by fall, but it's coming. So if you're a buyer and you've been frustrated, have some patience. Changes, we're starting to see signs. If you're a seller, be more careful. List your property as soon as possible, okay? I hope you enjoyed the graphs. Please look out for our housing report next week. We will be putting it out probably the end of next week. When we get the data, we have to put it together. We'll put the March housing report out, and we're going to add a lot of these graphs in there. So always pay attention to lamachiarealty.com. And if you want to get directly to a bunch of Florida information, lamachiaflorida.com. We're there for you. Our realtors are there for you. They are working very hard. I'm in touch with them almost every day. I'm in touch with one of them. They're working very hard all over Fort Lauderdale, up to West Palm, down to Miami and northern parts of Miami. We have a lot of sales going on, and our agents are very active and very busy and very knowledgeable. So if you're thinking of buying or selling, please give us a call. All right? Talk to you all soon. Thank you very much.